Hey guys, how's it going? It's Andy from Magoo Investing. Welcome back. In this episode of Robinhood Top Stocks, we're going to be talking about Nike, ticker symbol NKE. And so Nike is one of the most recognizable brands in the world out there today. Just based the name Nike, the swoosh, pretty much everyone in the world knows about it. And so today we're going to be breaking down the fundamental aspects of the company, what I see on the charts, and then talk about what I see as the short-term and long-term potential future of the stock. And before we get started, I gotta say that I'm not a licensed financial advisor, and I'd highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I'd really appreciate if you guys hit that like and subscribe button, as it would help my channel out a lot. And with that being said, let's get right into it and talk about Nike, ticker symbol NKE. Since I've lived up in Oregon for about 5 years now, Nike is kind of my hometown company, as they've been built at the University of Oregon, which is kind of the rival of my school at Oregon State. But they're pretty much the largest company in the state, and they're run out of the suburb of Portland called Beaverton. And so they're one of the most recognizable brands in the country. Also, the founder, Phil Knight, is also, I guess you could call him a fraternity brother. We were in the same fraternity. Anyway, Nike has a beautiful stock chart. It has a long history of great returns as a stock and just as a company overall. When I was looking at stocks, now that I've been looking more at the fundamental aspects of the companies, one of the big things I look at is debt, and kind of the sources of debt and how the change in debt over time has been changing. And when I looked at Nike today, it kind of was interesting how low they've had their debt and how it's kind of been spiking recently. And when I put up the chart where it has debt to equity ratio, this is kind of one of the key fundamental statistics that I look at to see how well a company is doing at handling their debt. And when you see the kind of spike up to 0.5, you're like, oh, okay, things have changed. But then when we go back to the video I talked about on Monday about GE, also if you missed that, I'll throw that up there. GE had a debt to equity ratio between 2.5 and 3. So even though Nike's debt has increased recently, I'm not super worried about that. So that's probably going to be the last time I talk about debt, because Nike has debt, but they have debt so they can make more money. So I think it's a totally fine thing just about the company overall. And so on this channel, I talk a lot about buying stocks that are at a discount, and kind of the criteria that I have for taking a position in a stock. The main one is it has to be a company that I believe in and I've used in the past. And here are some brand new Nike shoes that I bought like a week ago. So I believe in the company, that's for sure. But one of the other things is buying it after bad news or bad earnings. And kind of the reason I do that is more for the swing trades or just kind of being able to outperform the market. And so Nike is sitting at an all-time high, sitting just shy of $100. But for once, I kind of look at that and I go, I'm actually okay with that. Just based off of the company that Nike is, how reliable it's been, and how much I trust the company, I don't think buying at an all-time high is the worst thing in the world. Would I obviously like it to fall a little bit so I can get a better deal on it? Sure. But buying it at an all-time high, 99% of the time I talk about this on the channel, I say, maybe not. Let's wait for it to kind of drop down, get a better deal. One of the main companies, and of course my neighbors have to be doing yard work right as I started making this video, so we'll wait for that to end. And so another reason I decided to make this video is because earnings are coming up. And in the past, I've talked about how I never take positions near earnings, but one of the good things that you can get before earnings is kind of figure out what the market thinks about the stock overall. And so earnings, just kind of the earnings per share, the trend that it's been going shows a lot about how the company's been doing recently. And so Nike, when I throw that up right now, has done pretty well this year. Q4 has dropped a little bit for their expectations, but the forecast for the next year is increasing. And so I like that overall. Another thing I really like doing before earnings is looking at how the options are being traded. You can kind of go and see kind of the riskier bets that people are taking. And so before earnings, if people think the stock's going to fall, they put in bearish options against the company because they think it's going to go down and they want to make money off of that. And so when I looked at Nike today, one of the main things I saw is that there was $1 million worth of bullish options being traded and only around 200,000 of bearish. And so it seems like the market overall thinks that Nike is going to be doing pretty well based off of these earnings. Nike has their foot in pretty much anything when it comes to apparel, footwear, activewear, sporting equipment, pretty much anything. And I was really surprised when I looked up to see their sources of revenue that, it's expected that a lot of it comes from the active footwear, but then when I throw up the rest of the sources of revenue, they have a wide variety of sources, and I was pretty impressed by that. And so I talked yesterday about GE, how they have their hands in a lot of different aspects of their company, but I don't think they're great at one thing. Nike, on the other hand, is pretty involved in a lot of different aspects, and they're very good at what they do. They're very good at the online sales, which is great, which is part of the reason why a company like Macy's has struggled recently. Nike's been all over that. And so as a result, I think that Nike is a great long-term opportunity. It's not going to be great for swing trading because it's at a 52-week high, but just the long-term longevity of the company makes me feel pretty confident in a long-term position. So now let's head on over to the computer and talk about Nike charts, talk about what I see, and then look to see what the analysts have to say for the 12-month outlook of Nike. Ticker symbol NKE. So here we are on Robinhood looking at Nike today, ticker symbol NKE. As you can see, it has a 69% buy rating, nice. Almost 50,000 people owning it on Robinhood. I was kind of expecting it to be higher just based off of how popular Nike is with the younger investor crowd, which is why the most popular stocks in Robinhood are a lot of weed stocks. So I kind of expected Nike to be a little higher. But yeah, just short of $100 when we come down here. The dividend yield of 1%, so that's it's slow and steady based off of the past that Nike's had giving out a dividend. Been steady, but nothing to write home about really. 69% buy, 28% hold, and 3% sell. And so we have upcoming earnings on the 29th, so we're getting pretty close to that, which is why I was talking about today. And so let's go take a look at the charts, and we'll start on the 180-day 4-hour chart. And as I said, it's sitting at an all-time high pretty much. $100 is a very nice round number for it to reach, and it's kind of pushed down since that a little bit, but I mean the market is pretty even or even down today, and Nike's up almost 1%. So it's always nice to see. You have some nice price movement of, I'll just start charting out some stuff I see. That's a very minor zone, but I'm just going to put it down there. And I charted out some other zones that go back a little bit longer. But with a stock like Nike, unless something happens and the market overall kind of falls, I expect it to keep kind of pushing up. And as we go further back and kind of looking at the history that it's had, this is the last fall and winter when the market fell. Makes a lot of sense. Came down to a nice zone, pushed right back up, and just as fast as it fell, it recovered and actually got higher than its previous highs, which is always great to see. So the market has kind of went horizontal for a little bit, pushed up, new highs, came back, retested it. So when I talk on this channel a lot about retesting zones, this is exactly what I mean. The stock had problems busting through this resistance right here, and it looks like earnings was the catalyst to push it through, which is another thing I talk a lot about on this channel. So earnings pushed up to a new high, came down, and it retested that zone. And so that's why I normally talk about patience when buying after earnings, because just like momentum can push a stock down further than it probably should, and then it can recover, the same thing can happen on the other end for good news. So maybe the good news pushed it up, it kind of slid back, retested this zone, and that's confirmation that the zone is going to hold, and then that's when you would most likely be wanting to take the trade. It's very tempting to get in right after the earnings and ride that momentum, but yeah, that momentum can last for a day, two, maybe a week, but then a lot of times it usually comes back because people are selling their profits. So just something I'd talk about there. And so when we go back, I have recently added some extra time frames onto here, and the one I'm going to show off today is the 10-year month chart. It's not really great for technical analysis, but it's nice to just kind of see the trend of the company. And when you look at this, that's pretty solid. That is a lot. That's a beautiful chart to look at, and it just kind of shows the stability of the company. And so when you're looking at something for a long-term trade, this is the type of returns we like to see. We're not looking for horizontal. Horizontal is great for swing trading because you can make smaller trades and get in and out pretty quickly. But for something like Nike that you'd be taking more likely a long-term position, this is the attractive charts you're trying to look for, because this gives you the confidence to hold. Maybe the stock comes back and retests the $75 or $77 mark. You have the confidence based off the track record, how strong the company is, to be confident enough to hold for a while, even if things are kind of going sour in the market overall. So with that being said, let's look to see what the analysts have to say for Nike. So it's up 34.5% year to date, which is incredible. It's outpaced the market. Sitting at its 52-week high, and as we come down here, you can see all green. So we talked about GE yesterday or on Monday, and how their earnings growth has been down a lot. When you look at Nike, you see only green, which is if you're looking to take a long-term position in something, I feel like you're going to want everything to be green. We come down here in the price forecast, they have it up 50% and down 17%. And so when I talk about risk reward for long-term stocks, this is kind of the ratio you're looking for. Obviously, if you look at something like Microsoft, or I think Microsoft is the only one that I've looked at that even the low aspect of it is still green, but down 17%, that's not blowing up your account. 17% would be a tough year, but I think it's very unlikely that happens. And when you're comparing up 50% to down 17%, for a lot of people, a 3-to-1 risk reward ratio is pretty solid overall. And so Up 50% for such a well-established company, seems like a great opportunity. I don't think it'll go up that high. I'd be expecting a 15-20% year. This year's just kind of been crazy overall, just based off the recovery from last year. But I like the long-term outlook of Nike. Go to Yahoo Finance. They have it as a buy, overvalued, and then up in the short, medium, and long term. And I think that's a very fair sentiment when it comes to Nike. Based off of everything you've seen, Nike is a great company, and I don't think that anything is going to really be stopping it unless the whole market falls and the economy just slows overall. But I don't think there's going to be any news story that comes out and just shocks the world with how poor Nike's been doing and push the stock lower. I think it's reliable. I think it's a great opportunity for a long-term investment. So overall, it's pretty hard to say anything really negative about the company. The returns on the stock have been great. The fundamentals based on the company also look great. One of the things I've also kind of liked doing, just kind of looking at long-term potential options, is look at the insider trading, and that's people that are involved in the company. They have to disclose when they sell or buy shares. And so I kind of looked on there today to kind of see what was happening, and Mike Parker kept popping up a lot. And I was like, oh, that's strange. But then it makes a lot of sense because he was the head of Nike for a little bit, and he's recently going to be stepping down. So it kind of makes sense that he's liquidating some of those shares as he leaves. So that's not really a red flag. If you went onto a company and you saw that Elon Musk was selling 25% of his shares, you kind of be like, oh, right, so why? Why is he doing that? But when a leader of a company is stepping down, it makes sense that they're liquidating their shares, so I'm not worried about that. Another thing with Nike is they're not just dependent on one market. When we talk about companies that have been really negatively affected by the trade war going on, you think a lot about tech, but it also makes sense that Nike and other companies like Adidas and Under Armour would be negatively impacted. And so I kind of looked and I was like, so what percentage of revenue comes from North America, comes from Asia? And when I look at the geographic distribution of their revenue sources, I was pretty impressed. I thought it would be much more favored towards North America, just based off the fact of they sponsor pretty much every sporting event out there, and they are just the dominant force in activewear in the United States. But I was really impressed to see that they have their hands in pretty much every geographic region. And as a result, for a long-term investment, that's what you really like to see. They're involved everywhere. They're very good at what they do, and it's hard to say negative things about Nike. So overall, swing trading, probably not a great option for Nike, even though you can probably make some money based off of the earnings would be my guess. But just long term, it's one of the best looking companies out there. You're not going to be getting it at a discount, but if you're going to be holding for a couple years, 5, 10 years, or even longer, I think Nike is a great opportunity. So let me know what you think about Nike overall. Do you like their product? Do you like their stock? Do you like their very small but steady 1% dividend? Let me know in the comment section down below. Also, let me know what companies you're watching for the end of the year. Leave them in the comment section down below. And I'll see you in the next episode of Robinhood Top Stocks. Thanks for watching.